Hi everyone, welcome to Wealthy Mindset. My name is Oliver. Thanks for watching. I really appreciate it. Hope you guys are having a great day wherever you're at. And today I'm going to be finally giving you guys the video in terms of BlackBerry road to $180 per share, giving you guys my price targets and predictions as to when those price targets will be met, and by using graph analysis and fundamentals to back it up. Now, if you're new to the channel and you haven't seen my video in terms of evaluating BlackBerry at $180 per share, highly encourage you to watch it because it will be beneficial to give some context to this whole entire thing. It's going to pop up here and at the end of the video if you want to watch it at the end. And then also I'm going to be making a part 2 and a part 3 to that video because new things have surfaced that could be potentially helping BlackBerry in terms of long term, and could be hindering it in terms of the long term as well. So I'm going to be addressing those. If you're interested in those videos, consider subscribing so you can be notified when those videos do come up. Now, quick disclaimer like always, I'm not a financial advisor. I'm not a professional, so please do your own due diligence and research before buying and selling. Do not buy and sell based off the information I give you or the opinions I form off that information. And I do own shares in BlackBerry, so naturally I could be biased, so just be critical when you're watching this video. And I've been holding BlackBerry for 6 years, so I'm a long-term investor overall. I'm going to show you guys why I think BlackBerry has so much more to the upside in terms of just overall analysis, and I think it's going to be really entertaining. Like, you guys are going to be shocked overall. Today is February 10th, 2021, February 10th, close at $13.10. Market cap is $7.36 billion, so on and so forth. Now, you see these lines. So these lines are either resistance lines or support lines. Resistance lines is obviously, it's going to be harder to go through them. Support lines is, it's harder to break through them in terms of the downside. So now, these lines right here, downward trend resistance line right here, downward trend resistance line right here, downward trend resistance line right here, and then downward trend resistance line right here. And I want to show you guys something really significant, in my opinion, what is pretty cool over here. So we have from 2001 dot-com bubble of the ultimate high for BlackBerry at $22, $23 a share, going downward trend resistance lines for the next 3 years until February 2003, arguably, right? And it finally breaks the resistance line, right? Now, it doesn't always mean that if you break the resistance line, you're going to be going to the upside for quite a while. It could be a false breakout. But when it's an actual breakout, it tends to be a pretty good breakout. So if that makes sense. But from 2003, beginning of 2003 to end of 2004, arguably for 2 years, you had a massive run up. So you went from ultimately, $2.06 to $29, $30 for the most part. So that's a really good run up right there. Now, it doesn't necessarily mean the longer the downward trend resistance line has been going, the higher the run up will be, because you have a 3-year downward trend resistance line here, and you have 4-year resistance line here. So from 2013 to 2017, so it's a 4-year resistance line, but yet the run up is not as long and is not as powerful, right? So you got basically 2017, about $7-8 give or take, and then you have it here about, I remember when it was trading around this time, it was roughly about January 2018. And it was about almost $14. So you got partially like a 90% jump for the next year. So 1 year kind of jump. So, but it's still, nonetheless, it's still really good. And I'm going to get to this massive one. This is a behemoth one. This is for a 13-year downward trend line. This is the coolest one in my opinion, but I'll get to that. Don't worry about that. So here's a downward trend resistance line, but it could act as support. So it's a backtest support, resistance backtest, so resistance backtest, but it breaks off here. Now, the reason why I wanted to show you guys this one first is so it broke through this resistance. You had a nice spike, but then ultimately we were going to get to this behemoth one right here, right? But we broke through it, and this day was December 1st, 2020. And the reason why it's significant, it like timed it perfectly because it looks like it was about to backtest again, right? But that news came out for Amazon and BlackBerry partnering up with the BlackBerry Ivy system. So coincidentally, it was like just the perfect time to just break through that resistance level. Now, it could hypothetically be a false breakout, but this is like such a big breakout that for it to be a false breakout, I don't know, in my opinion, I think it's unlikely that it's a false breakout. So that's the first thing that I want to show in terms of the breakout. Now, how long is that breakout going to last? Who knows? It could potentially be for a year, because most of the breakouts that are significant, because keep in mind, oh, by the way, yeah, so I didn't go through that. So that was from December 1st, 2020, right? Now, this one, this downward trend line, this dates back from 2008, and it's a backtest here, 2008, and then where is it? Here, 2011, 2018, backtest all the way through, been keeping us down ever since 2008. And again, like I stated, December 1st broke through it, and just I think we're going to be in great shape again, and that's my opinion, above the short-term moving average, but we got capped by $28-$29 moving average overall, the long-term moving average. So if you were trading within the past 3 weeks, you would have noticed that we went up to $28-$29. That's not a small thing. That's not like a small reason why we got knocked down. It's a pretty big reason, and I'm going to go elaborate. Actually, I'll go to that later. Actually, never mind. MACD line is in the positive too, and the reason why I'm mentioning that, so this is the second reason too, as to why I think we have so much room to go up. Now, MACD is crossing right here, and the reason I'm mentioning that is there's a multiple instances where MACD line crosses over to positive and has a run up for 4 months or 6 months. I've seen another example. Another one was for 2 years, so on and so forth. So I'm going to try to be conservative with the numbers as much as possible. So I'm predicting a 5-month run up. But again, nobody knows for sure. This is just my opinion. Again, so on and so forth. So I'm going to show you one example where it runs up for 6 months, I believe it was. So right here, October 1st, 2012. Now the date's not exact probably, but whatever. It could have been October 15th or something. But $7.69. MACD line crosses over to a positive, you can see right here. And from October 12th to April 13th, so arguably a 6-month run up, and it went up almost pretty much double for the most part, 1654, maybe even 17 if I went up exact, or 1668. So there's more examples here and there. The only thing is I want to keep the video short, unfortunately, sorry about that. But on average, it's I've seen, or not on average, but I've seen one for 4 months, 6 months, 2 years, so on and so forth. So there's that. Now, the third point, so by the way, I just switched it to algorithmic viewpoint. I was originally at the logarithmic viewpoint. Logarithmic, by the way, compresses the graph, so that for me it's easier to analyze in that sense. Okay, so the reason why I want to show you guys the graph like this is because Kathy Wood, who is the CEO of ARK Investments, she was the one who evaluated Tesla first at $4,000 a share and $7,000 a share. The reason why I'm mentioning her is because she's the one who said in an interview that if a stock goes flat for so long, one of two things happens. It either will spike up dramatically or drop down dramatically, right? And John Chen became the CEO of BlackBerry in November 2013, and essentially it's been flat at $10 for the most part, on average $10 for the past 7 years, and then it spiked up just not randomly, but now to $28, $29, and then now we're at $13, $14. So that big massive spike up has happened, and the reason why I mentioned 7 years too is because John Chen, CEO of BlackBerry again, was the CEO of Sybase, another software company, before BlackBerry for the past 10 years before BlackBerry entering the CEO kind of thing. And the first 7 years he was there, the share price of that company was $10 a share. And then in the last 3 years, it started going up, and it was acquired at $100 a share through an acquisition, right? So that was a 10 times multiple. I'm not saying it's going to repeat, but I'm just saying that he is a successful turnaround CEO. And then second, it seems to be following the same trajectory where BlackBerry has been flat for 7 years, and then now we're spiking up. So for the last 3 years, and his contract ends in 2023 as the CEO of BlackBerry. Now, is it going to be renewed? I hope so, but I don't know if it will necessarily, right? Now that's the second thing that's the third thing. So we got the MACD line crossing the positive. It could be a false breakout, by the way, for the MACD line, but if it's not, the run-up could be good there. The run-up could be good going flat for a while. The repeat of the history in terms of the CEO, downtrend resistance lines breaking through, and so on and so forth. So I think those are all really awesome and significant in terms of what could happen. Okay, so I'm going to show you guys the price targets right now and my predictions as to when these price targets are going to hit. Now, I highly encourage you guys to watch the video all the way through, so that way at least you see how I got to these dollar amounts. So that way, based off your own research and your own opinion, you could either agree or disagree with me and be like, Oliver was right because of this, or Oliver is wrong about this because he didn't account for this, and so on and so forth. And then also take this with a grain of salt, because this is for the next 4 to 5 years. And for this to be 100% accurate, either I'm a time traveler, or I could see the future, or my intelligence level is somewhere over 9,000. So take it with a grain of salt. And congratulations if you got that reference. But yeah, so there's a lot of variables that I could account for. BlackBerry could step into a new market that way. Then these price targets are undervaluing BlackBerry, or BlackBerry could be doing something significantly wrong, and these are too optimistic. Now these are in U.S. dollars, in U.S. dollars, and then also I do account for some volume. Now, if you're completely saying no, this is too optimistic, then by December 2023, I would say it's fair to say that BlackBerry will be worth $45 a share. The reason why I'm saying that is that's what my valuation was before the Amazon and BlackBerry partnership. But now because of that, I think it solidifies the $45 price point. And then also there was a person who analyzed BlackBerry about 2-3 years ago, and he went on CNBC, I believe. I forgot his name. I believe it was Andrew or something. And he said that BlackBerry in the future will be worth $45 a share. Now, that was 2-3 years ago. So I don't think he obviously was not anticipating the Amazon and BlackBerry partnership for the IV system. So I think that would be a conservative estimate if you were trying to hold BlackBerry for terms long term and you weren't this optimistic and you thought $45 is reasonable by December 2023. Now, I have $50 billion market cap here, $100 billion market cap here, and $16 billion market cap here. I think this is pretty fair in terms of, now $50 billion market cap is $88.50. $100 billion market cap is 177, or between 177 to 180. And the reason why I throw this in here is because BlackBerry's competitors in the cybersecurity industry is around roughly average $50 billion market cap. There's one around the $30 billion market cap, or give or take. But BlackBerry has so much credentials that I think it should be fairly evaluated here. But I'll explain more in future videos, and I explained one in the evaluation video. So I'm going to show you guys specifically this one right now, and I'm going to just go down through the line in terms of showing you guys how I got to all these. Right. So first, the $30 price point. We have two support lines going to the upside here, and another one right here, dating back from October for this line, 2020, and this one's dating back from November 2020. You can see back tested here, so on and so forth in terms of support. Now, if you're optimistic and you think that it's going to continue on the support line, then you're thinking it's going to hit about $30 by early May, end of April 2021, give or take $30 a share. And then if you're not overly optimistic and you think that it's what it's, in my opinion, is going to do is hopefully bounce up here, come here, whatever, or break. At one point, it's going to break through the support line. That's what I'm trying to say. So if it breaks it here, so be it, I guess. But ultimately, it's going to bounce off here and then continue to the upside at one point, or maybe even get back up here, either way. But ultimately end here at this support line, or at this price point at $30 a share by September. So August 31st, $30 a share, or September 1st, 2nd, $30 a share. Now, if you want to know like how it's going to break out, you see right here, it was up on the support line, bouncing off, back tested, broke through the support line, bounced off this support line, and went to the upside and got back on the support line. So essentially, I think at one point it's going to do the same thing. But again, nobody knows, so do your own research, own due diligence, form your own opinion. But this is my opinion as to what will happen. So by August or September, it's going to hit $30 a share. Okay, so now for this range, I'm going to show you guys based off of graph analysis and the earnings for 2004 versus 2020. And then I'm going to show you guys in terms of like high level, not show you guys, but tell you guys in terms of high level for 2006, 2007, 2008, and a little bit so on and so forth. Now, I'm going to show you guys first the Dow Jones, because in terms of 2020, BlackBerry was going, like everybody was going through the pandemic, so the markets weren't doing that great. We had a massive drop here for the most part in 2020. Yes, we did recover at one point, but 2020, from the comparison I'm going to be showing you, was during the pandemic for BlackBerry and other stocks too. And in 2004, yes, it went during the recovered from the dot-com bubble, but in 2003, end of it, it was still doing pretty good. And then from 2003, end of 2003 and forward all the way to 2007, the markets were doing pretty well. This is the Dow Jones, by the way, FYI. So now if we go to BlackBerry, if you go to 2004, it's right about here, $14 a share. And on April 7th, if I remember correctly, they reported earnings, and their earnings was $210 million a share, or $210 million a quarter, $594 million year over year, and they jumped up to the next earnings around $23 a share, right? Now, right now, BlackBerry is reporting, or no, not right now, but in March 31st, 2020, so same quarter, they reported $290 million, so $80 million more than this quarter. And then year over year, it was $1 billion, so more than this quarter, or more than this year over year. But yet, right now we're at $13.10. Some analysts gave it a rating of $7.5 billion, $7.50. Sorry about that. I can't speak English, but so there's that. Now, during this time, right about here, 2006, it reported $3 billion year over year, and it spiked up to, where was it? September right here. So $36.60, and then right about here, they reported $5 billion year over year revenue, and they were at $43 a share, and they spiked up to $70 a share. And then here they reported $8 billion of revenue year over year, and they spiked up ultimately, arguably, to $116 a share. But this was during this time, so actually they dropped down. I don't know why they spiked up, but either way, they reported $8 billion revenue right here. Now, the reason I'm mentioning revenue is because a lot of you guys are saying we need to see revenue, we need to see revenue. Yes, fair enough, I agree. And arguably, you would say that here, their year over year or the quarterly earnings were, in terms of jumps, was massive. Now, this was 37%. I believe here was somewhere between 15 to 20% quarterly earnings growth. But year over year, I think was almost double here. And then here was about 20%, if not 30%. Now, the thing is, though, keep in mind, they went from 300 million to almost 600 million. Here, it's a lot difficult to go from 1 billion to 2 billion. Like, a lot more difficult. It's not necessarily difficult, like impossible, but it's a lot more difficult. So take that with a grain of salt. But I think that's pretty much a fair analysis given the pandemic, given the situations and stuff like that. Now, the reason why, again, I mentioned revenue is because revenue was going up, and then right about here, their revenue did not go down. So they reported about $8 billion year over year revenue. Here they're reporting $20 billion year over year revenue, right? Give or take. So 2008, 2009, 2010. Now you can say the iPhone came out, but that does not, to me, does not justify that much of a drop. So it must have been something else. If anybody else knows, comment down below. That would help out in terms of overall, like everybody else too. But right here was about $18 billion revenue year over year, and it was $14 a share, and that's pretty bad because we're at $1 billion revenue, and then it dropped down here to $15 billion revenue, and it was $6.48 a share. Now this does make sense if you're looking purely at revenue, but then what about this spike? Like I probably should have checked what the revenue was, but I doubt it spiked up that much. I doubt it passed. Actually, I know for a fact it did not pass $20 billion, right? But that's the only thing is, so sometimes revenues and fundamentals don't necessarily back up share prices. It's more for future projections. If they could see future growth, that's essentially what people get into stocks for. And I would argue the revenue for the future will be going up, in my opinion, because of the Amazon and BlackBerry partnership in terms of the IV system. That's the thing. So yes, I would agree with you before that we need to see revenue, but because I see the future outlook in terms of the potential revenue that will be coming out in the future, being the IV system, I think that revenue in terms, or investing in the stock for the future for this company is now sound, but that's in my opinion. This is not advice, this is just all my opinion. So there's that first part. Now I'm going to show you guys, in 2006 is when the consumer stuff came out, right about here. So this run up right here was not mainly about, like, what I mean by consumer stuff, they had consumer stuff, but the BlackBerry Pearl, BlackBerry Bold, Curve, and all that stuff, now they didn't come out all the same time, but they started for the most part around here, right? And the one thing I want to show you guys, this is the main thing I want to show you. So they had subscription service at right now a little bit over 1 million subscribers in terms of a service, and I'm assuming this was the enterprise version, because I don't think they had the consumer version yet. And it was roughly about, from what I could find, $5 a month, right? Reoccurring revenue, right? And the reason why I think this is significant to know, and they had quarterly every quarter they were increasing. Actually, in this quarter they increased to 104,000 clients in terms of subscribers. So it was a total of this either way. But the reason why I think this is important is because with the IV system, I believe that there will be in the ballpark of 25 million vehicles. So if they're at 25 million vehicles for the first year and you drive it, and then the next year you still need that subscription base for 25 million vehicles, like explained in the previous video, then the next year's vehicles will be another 25 million. So I got 50 million vehicles that all subscribing, and it just keeps compounding and so on and so forth. And I believe that they'll be charging more than $5. And I know the upkeep will be a lot more for that system, for the IV system, but nonetheless, it will still generate more revenue, and then the amount of subscribers will be phenomenal. Just imagine compounding that 5 years and 10 years and so on and so forth. Okay, so now the breakdown going up to this side. So $32, $35 a share. If we go with the graph analysis right here, the reason why I'm saying $32, $35 a share is once we pass, or actually before I say that, okay, so in terms of, when I'm trying to go to the upside, I highly look at resistance levels, right? So if you look at here, we're at $16 and $16 to $17 a share, right? You see it backtest right here, right? So if you see these dotted lines, follow these dotted lines, they're going horizontal, and you can see the price point right here, right? So if you're going horizontal, you have backtest resistance right here at $16, $17 a share, backtest here. So by the way, this is 2013, 2011, backtest right here, 2003, and then backtest here, 2000, right? Now if I zoomed in even more, I'm sure I could see like maybe something here that was backtested, but whatever, it doesn't matter. So about $16, $17 a share, you can see the backtest. And you've noticed that within the last 3 weeks, before we skyrocketed to the $28, $29, we were hovering for quite a while around the $17 price point. There is a reason for that. We could have, we consolidate there for a while. And then also keep in mind, even though it's resistance, it could still count as support too. There's times that resistance acts as support as well when it's going to the downside. Now the next level that was important was the $20 price point right here. It was support all the way across, right? So support through 2003, 2004, and I think the last time was 2005, right? And then also here, it acted as support in 2011. You can see that slant right there. That hit, and it was trying to consolidate, but yet it could not go back up. So that was in 2011. So $20 is another consolidation point or important level. The next important level is the $23, $22, $24, $25 price point, which goes back to the dot-com bubble, 2000, right here in 2004, 2005, or I think I messed that up. Oh yeah, so acts as support 2005, 2006 as resistance, and then I believe right about here, 2011, right, as support. The reason why I'm mentioning these things, okay, so actually I still haven't gotten to that yet. Hold up. So then the next level is the $30 price point. Actually, technically the next level would be 26 or 27, but that's really small, so don't worry about that resistance level. But I'll just go over it. It's $26.72. But the next level, the main one, is $28, $29 a share. And this dates back from 2004, 2005. I believe this is 2006, 2006. And then there's a couple slants here, so that dates back to 2011. Plus, the moving average is at $28 a share, right? So you have quite a bit of a resistance to pass $28, $29 a share. But the only thing is, though, John Chen does have a bonus. The CEO of BlackBerry does have a bonus once he does get signed, or not signed, sorry about that. Once the share price passes $30 a share and stays there for a few, like I believe 10 days or 60 days or 30 days, I can't remember. And then he gets his massive bonus. So I don't think he will not work hard enough in terms of, like, for example, having a bunch of contracts being signed, a bunch of press happening, so on and so forth, like doing his due diligence in terms of having the business run full throttle during that time, and having earnings do pretty well. So I think he would want to have that bonus, so that $29 barrier will get broken. And if you really, really want to be conservative, and like no matter what, we'll hit $30 before 2023 or at 2023. That's my opinion again, just to let you know. So the next level is $34, $32, $35 a share, so on and so forth. And then the next level is around $38, $39 up to $47 a share. So I'm going to stop at this right here and explain this one. So the reason why we're going to get $32, $35 by December 21st is because once we pass this $30 price point, which I said it was in September, there's not much resistance to the upside to get to the $32, $35 price point. So that's the reason why I gave that, is because once we pass this, because this is a major resistance level, it's going to just skyrocket to this level, right? Quite easily, actually. And to the point that where it actually might just cut through this level, because there's a lot of resistance at the $29 level. That's the thing. It's major resistance all the way through that we see, and the moving average. So to the point that we might even go through this like butter, like we did for here. Watch, for example. So if you go back a month ago, or not a month ago, within 3 weeks and all that stuff, when we had the spike to $29 a share, is it right here? Yeah. So earlier in that day, before we hit $29, by the way, we opened the day at roughly $20 a share. Earlier in the day, we back tested at $23 a share, went back down, and if I had to guess, we would not pass $23 a share, $25 max that day. That would have been the utmost max, but yet we came back down and cut through it like butter and went straight up to $29. Now, obviously we back tested and came back down, and then you could see it tried to act as support in after hours, but then this is when the Robinhood incident happened, and this is where the Reddit community servers were shut down. So Reddit first, after hours, started going down, short sellers came in, that's what it looks like, this is my opinion, and then the servers got shut down around this time for the Reddit servers, and then the next day it spiked up, but then essentially Robinhood started sending the message to everybody during pre-market time, and then this is the Robinhood incident, and so on and so forth. I will be releasing a video explaining the whole entire spiel of that incident that day and giving all the details in my opinion. So if you're interested in that, consider subscribing, so when that video does come out you could see it. But so there's that explanation for that 32.35. But so the reason why I said that is because that $29 is such a huge resistance that since we cut through the $23 and it spiked up and cut it through like butter the second time around, I think we might do the exact same thing where we just might once we break through $29, get to 30 easily, and then like literally get through this to the point that we might not even see a consolidation period of this. We might just go through it completely and then head to $41.47 or $41 to $47. And if that's the case, we might be there by January. If that's the case, I don't think it would take too long, but I don't think it would be this quick either though. So I think by January 2022, it would be at $47 a share. But let's just say that does not happen, it would be this ballpark. Now the $58 price point is right about here. Once we pass this 47, we would end up essentially going up to right here. Where was it? When I measured it last time, yeah, it was $58.71, because there's a support level right here too. So $60, $58, so on and so forth. December, April 2023. These are all the same thing for the graph, so I won't really necessarily show them because I showed them earlier. The reason why I want to get to this one is because once we get to here, so this is where the hiccup could happen, right? If we get to here and the revenue starts showing for the Ivy system, because this is where it's going to start showing, right? Maybe arguably probably right about here for the most part, we could start growing pretty quickly, right? Now, if it doesn't start showing and it starts showing here, then it's going to be a slow growth here. Now, at the same time, by the way, too, when, let me see. Yeah, it all depends on when the revenue for the Ivy system comes in, right? So if it does come in, it's going to start going through these, and these are all graph points too as well that I showed earlier about in terms of we hit this level and that level. If I didn't, I'll show it again just real quickly, and I'll probably edit it out if I did show it. But essentially, this is a low estimate if the Ivy system starts picking up like crazy, because $100 billion market cap, in terms of year-over-year revenue growth, if you compound it for 5 years and people start seeing that trajectory and it just keeps going higher and the year-over-year growth is just growing in terms of massive multiples, then it might just end up getting to $300 a share. The only thing is, though, it is a big task to do for the Ivy system. As great as it is, it's not an easy thing to do still in terms of having everybody sign, even though I think a lot of people will sign for it, and so on and so forth, and having like everything work together correctly. Not in terms of the system, but in terms of business-wise and getting all the contracts signed and so on and so forth. It might be a little bit delayed, but if everything does follow through from what they said 2023, they have one potential client starting and they would start going on, so on and so forth, I think these would be pretty good. Now I'm going to show the graph just in case if I didn't show it. Let me see. So after that price point, you have 58.59, and then you have the $60 price point, 62, and then you have the 69.62 right there, like I stated earlier. You also have the 68, by the way, and then you have 69. There's going to be obviously consolidation period there. It looks like $74, $80 right here is about $88. If I measured it last time correctly, it was about $88, and then here's $112. I think, yeah, actually I think this graph is wrong. This should be 112, I think. No, I'll leave it at 102 because I'm going off of what I analyzed it last time. So I must have had a reason for 102. Then it's here $112. Here it's 120, 128, and then it was 135. I remember when I checked it and zoomed in fully. The next level was 144, and the next level was 155, and then that's it. The reason why I went with $5 increments is because I noticed I was starting to go with a little bit of $5, $10 increments, so I did the same thing here, and that's that spiel. So thanks again for watching. I really appreciate it, guys. If you guys like the video, give it a thumbs up. Thanks in advance. It really helps the channel. And if you have any questions, I'm sure you guys do, comment down below and I'll try to answer them as soon as possible. And if you do like videos in terms of like passive income, financial freedom, stocks, mortgages, credit scores, so on and so forth, consider subscribing, and because I'm going to be uploading these types of videos. And thanks again for the awesome support, and I'll see you guys in the next video. Peace.